Hello traders, this is Corey Mitchell with your swing trading stock market outlook for the week of November 20th. It is a shortened trading week, something to be aware of. U.S. markets closed on Thursday and closing early on Friday at 1 p.m. One thing to know, which we don't cover in this usually, but on this page, Black Friday sale going on now, 20% off all courses. If you go to the best and worst months for the stock market, seasonal patterns, there is something that applies to Thanksgiving way down here at the bottom. And if history is any indication, the few days leading into Thanksgiving are generally good periods, and then we also have a bit of a post-holiday seasonality pattern where it tends to be good. So historically, Thanksgiving week, a pretty good week for the stock market. Volume is usually lower, so you just get a bit of a drift up. So something to be aware of. You never know if this year is going to be the same, but historically, Thanksgiving week been a pretty good week for the stock market. And we are in very good health. Each week I go through the same process just to see how aggressive I'm going to be at deploying capital on long swing trades. We look at a few different things, which we'll get to. And heading into the week of November 20th, the market conditions are good, so I am deploying capital on long trades. You can check out the best swing trading stocks list for November. This is basically two lists, one with really strong stocks. That's the one we'd want to be focusing on now. And then there's a list of very weak stocks. That'd be more when conditions are weak. We'd maybe want to look at those for some potential shorting opportunities. Right now, I would say focus on the strong stocks. The current stock watch list, this one's just stocks that are strong overall, not necessarily have a setup forming in them right now. The current stock watch list is ones that I've actually gone through a scan and looked for actual patterns that I trade, and those patterns are forming in those stocks right now. So I just updated that list, so it is fresh. You can also check out the best performing ETFs, best performing stocks list for some other ideas. And if you have investment accounts as well, this is more of a swing trading video and article. But if you do have those longer term investments as well, maybe in a separate account, you can check out these lists, because as we go up, those stocks are going up as well. So not a bad time to buy coming out of the dip that we just had for longer term investments as well. Let's check out the market indices. Not much to say here except that everything is in at least a short-term uptrend coming off this October bottom. So basically what I look for is you can kind of see a structure change where we had this lower swing lows, lower swing highs. That has changed. We've had a higher swing high in the NASDAQ. That is signs of uptrending behavior. We've had it in the NYSE composite. We had a high here, a new low here. We got almost up to it last week, and then we surged above it this week. So we have a higher high there. Higher highs in the Russell 2000. Higher highs in the S&P 500. Higher highs in the Canadian index, the S&P or the TSX composite. So at least short-term uptrends in all of these. That's good to see. All of them moving together means lots of stocks are advancing and showing uptrending behavior, which also the health indicators show us, which we'll discuss next. Bitcoin had this big range going on, nice breakout, and is still holding up well. A little bit of volatility the last few days, but overall, I like this, what's going on. State of the market health indicators. We can just see, even without zooming in, we can see these are all pretty good shape. Let's take a look at them real quick. Much easier to make money on the long side when most stocks are in uptrends. The 50-day moving average of a stock is a very crude measure on uptrend, so this indicator is measuring how many stocks are above their 50-day moving average. 71% of S&P 500 stocks are above their 50-day moving average. 61% of all U.S. stocks are above their 50-day moving average. That means it's much easier. You're trading with the tide. Much easier to make money when most stocks are moving up when you're buying. So that one's good. Volume not super important to me right now. This is the daily percentage movement of the S&P 500. I included the downtrend as well. You can see much more volatility in daily movement. That is more indicative of downtrending behavior, especially these big drops. Single day drops of more than 2% are an automatic red flag for me. If we get that, I usually stop trading for at least a couple days, no new positions, because you're not going to miss out on much usually, because you usually get some further declines or the price just stagnates, has to absorb that selling. So we see this during the downtrend, really big drops, lots of them. During these uptrending periods, volatility quietens down a bit. You don't get those big drops. And that is what we've had basically going on since March. We had volatility dropping off as we started to rally out of late 2022. Still a little bit volatile though, and you can see it's really changed quite a bit, especially during this April through August period where we had this nice steady uptrend, really low volatility. Low volatility is a sign of a good uptrend. It's boring. You want uptrends to be boring. So we've had a little bit more volatility recently, but it's actually been mostly to the upside. Even during this pullback, we had a couple days where we had some bigger drops, but nothing hitting that 2% level shows that it is just more of a natural, common type correction, not a major sell-off. Advanced decline line here, a little flat. I gave this one a flat face, not a smiley face, because it's a little flat here. The S&P really surged, and you saw the other indices really surge above prior highs, and this one just kind of flat. So it's not necessarily bearish, but it's not really confirming the move at the moment. So that's our one, let's say, call it kind of warning flag out of everything. That isn't quite moving the way it should. On the other hand, this indicator is great. This is up volume divided by total volume, and it shows really strong enthusiasm coming in. We had 2 back-to-back 80% upside days. That means 80% of the volume that occurred in all stocks occurred in stocks that moved up on the day. A really strong testament to buying enthusiasm. And that occurred right near the bottom, which they often do. And if you want a cherry on top, we had a 90% upside day on Tuesday. So that means 90% of all volume that occurred in all stocks occurred in stocks that moved up on the day. Really strong enthusiasm. What we want to see. Sectors on the move. Pretty much everything. We could basically say energy and healthcare are not great. They're lowest on the weekly, they're lowest on the 1 month, and they're down here near the lows on the 3 month. Everything else pretty good. Again, I don't look at sectors too much. I just run my scans. This would be more if you're just really pinched for time. Maybe you only scan for a few of the really top sectors, and that might bring your list down from, I think I had to scan through 180 stocks on the US. If you only scan for a few of these really hot sectors, maybe that brings it down to 70 or 80 or 90 stocks. I don't exactly know what it would be, but it would reduce your scan list, and you'd be focused more on these really strong performing sectors. So that's more what this section's about. Doesn't mean you actually have to pay too much attention to this. If you're running a scan for strong stocks, you're going to find strong stocks, which will potentially be good trades. What am I doing right now? Keeping it simple. Deploying capital in long swing trades. I have also been, if I've been eyeing some investments over the last few months, and maybe I was holding out on some of those a little bit to see the indices improve, well, I'm also buying those. So pretty much across the board, I'm liking what I'm seeing out there. As always, day trading stocks, day trading currencies, and those are a little bit more, you can do those every day, whereas the swing trading, we definitely have these pockets. We're in a pocket right now where we can take some trades, but then we have these pockets sometimes for months where it's not really ideal trading conditions, especially if you're only on the buy side. If you short stocks as well, you'll definitely have more opportunities to take some swing trades on the short side when conditions aren't good. But it's a little bit more of this, pocket type trading where we're really active, then it's a break, then it's really active, then it's a break. And day trading just allows us to take those trades every day and maybe generate a bit of income every day. And the passive investing is more just a few ETFs, just putting some money into them every month, whether the market's going up or down, so that over time we just get the average price, we get the average 10% return that the S&P has given us, and whatever other indices we decide to invest in. So that's also another approach that I use. So these are all things that are kind of always going on with me. So that's your weekly stock market outlook. Looks pretty good out there. Thanksgiving usually a good week. And have a great shortened weekend out there, or shortened trading week out there. And happy Black Friday shopping. Have a great Thanksgiving.